The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour with your lovable, squeezably soft host. As always, we come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
Yeah, we got came back to flat on the day. Ended up bouncing. We're up 9 points on the S&P cash at 2733. We'll take a look at the volume, which is fairly low. It's about 4 billion shares. Again, we had a very light volume pullback, not pullback, but push higher yesterday. We're getting that second, even lighter volume day today. Don't think that there's anything for us to be actually thinking about too much. Dollar index is up almost 25 cents at 95.81. I'll call it 95.82. So we've had a little strength out here. The Fed came out and started talking around noon. That didn't really do anything more for it, but kind of pop it a little bit after he got to talking. It'd been moving since about 5 a.m. Where it started to move higher, but quarter is that big a deal anymore? No, but again, it certainly looks like it's very stuck in this 95, 96 range. Again, the volume fairly light for today. So the question is whether or not we've got, or what we've got left out here. On the rest of them, Dow's up 144. NASDAQ's up 47 after being up about 90 yesterday. So a little lighter. Russell, which looked, at least to me, earlier in the day before the market opened, kind of the weakest sectors out here. And it's basically flat when the others are up. So I don't know if that's telling you a great deal or not, but we'll keep an eye on it. Okay. What do we have? See if there's anything else out here. The conundrum that keeps on going on is the bond market. We'll look at that with the TLT. Handful of other things going on. Don't have really anything in history today. It all bored me. I think we've been through it before. The only interesting thing was the first "Don't Walk" sign was installed in about 1950 on today. So, if you want to do something, do it on the 5th of February. Not much happens. So we're going to bypass history today. We're going to go right into some charts. You can give me a call at 877-927-6648. You can always put a email, or not an email. You can email me at path@tfnn.com, and you can actually put a message in the den if there's something you want to look at. What do we have? Okay. Just looking at a few things out here, see what I want to talk about. First request today already coming through the email system is Intel. As I said, when they got this new CEO, now that he's running the show, he's a CFO. Generally, when you get a CFO, things bounce fairly quickly because they know where all the dead money is and they can get rid of that fairly quickly. The downside is any long-term growth in the company generally kind of neutered a bit. And I suspect, we got to $50.72, which is this last major gap from this gap down on Intel. That happened on July 27th. Came down with let's call it 68 million shares. We're back up into this 21 million shares. My guess is this thing is probably neither fish nor fowl for a long time. if the market really continues to push higher, maybe this thing can get a little sweeter. But for the most part, I don't see a lot going on in this in the long term. As I said, short term, you can always cut some expenses. Long term, though, CFOs don't tend to shake the dice much or gamble on anything long term. They all are pretty much just the facts, ma'am. But that also means that you probably, if you don't send a ship out, you're probably not going to have a ship come back in. And that's generally the problem with these big CFOs. But again, short term, positive, long term, negative in the fact that there's just nothing that ever really comes about. We can look at Steve Ballmer at Microsoft as famous examples. I think we can put Apple in that same category now, where what they've had 4 major products, and neither of them have gone more than 5% of total earnings. So that ends up being, one of those things where have they lost the magic? You don't know. But for the most part, probably they had some products that could have done a lot better, but some of them have been pushed out. In fact, Apple actually has a problem with its laptops now dying. But the media doesn't talk about it. They've got their chosen winner, and that's always going to be Apple. If you're, I think 90% of the media, that is their guy. Microsoft, not so much. It kind of has to earn its keep. And I always think that they've got that, what they call the curse of Sports Illustrated, where you're the rookie on the cover and you never seem to do much because you've already been anointed. I think that's always a problem, too. Anyway, give me a call at 877-927-6648. We'll look at some other charts here and see how things are going today as we continue to keep a very close eye on what's happening now. We had a little pullback down to flat. Everybody's pushing it now, but there is no volume. So keep an eye on that. Intel, as we said right there. Let's take a quick look at Apple. Apple's up on yet another gap. Today, it's up with 25 million shares. The gap up on earnings was 61 million shares. So again, you had that nice little pop on earnings. Could it get up to this 180 gap? But I don't know. I'm going to say 20% chance. More likely, I suspect that 178 is probably where this thing runs out of gas, if not it being today, as we continue to keep an eye on this. But there's just, there's not a lot of bears, but certainly not a lot of push into these higher markets. The first question out here, or next question, I guess, is GLD and what's going on it. Just kind of pulling back a little bit. Not much happening. Certainly light volume yesterday. You were down on, let's call it 6.9 million shares in the GLD. That's compared to the upside of about 12 million shares back on the 30th. So some light volume retraces in gold, but no real symbols of weakness here. We'll be back in a minute.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Other stocks of interest as we watch these highs get pressed on lighter volume. Autodesk pretty much touched its December 3rd high that had 2.9 million shares, $150.41. Went through it and closed above it yesterday on 1.7 million shares. Today you got 900,000 shares. So it is very quiet out there on the Western Front as we push through some of these highs. Now a couple of stocks have been able to finally break out. Boeing is one of those. And we see this thing pop above its previous high. That's the October 3rd high. What is that? 392.57 with 4.8 million shares. Got to that yesterday with 4.2 million shares. Now it's gapped up. It's got 4.5 million shares. You're going to have a little bit more volume. It's not going to be Rocca's volume, but you're at least going to tie, and the tie goes to the runner in the stock market. Other stocks that look like there was some weakness in them. A.O. Smith makes water heaters for the real estate sector. That December 3rd high for that one was 49.29 on 4.6 million shares. Yesterday he had 4 point. Is that right? Yeah, he had 4.6 million shares up to that December 3rd high with 0.5% of that high. Yesterday he had 1.6 million shares and 1.3 million shares so far today. Some nice movement on this, but it looks like a lot of short covering. I don't see where the housing business is coming back quite that quickly. Avalon Bay, you had a nice little pop in this one today with a little bit of a reversal. You've got the December 7th high at 191.91. What is this? AVB, right? It is. So you got to 393.73 today. So you got above that, trading 193.18 now. But you know, you just talk. You've got very light volume downs and ups as we hit these highs. And again, you're really not busting out those previous highs. They're a little lighter. It's not as horrible as one would think. Another one that has been in my crosshairs for a while is Avago. We've heard about the slowdown in the cell business. It doesn't look like there's any slowdown in Avago. Certainly, this is going after its June 15th high, 268.31, got to 274 today and kind of rolled back down. But again, you need to close below 268.34 to seal the deal as that as a top. Let's see, you got any more emails here? I think we do. We'll do this and then we'll go to the next one in the email. What do we have? A nice little run up on very light energy. Again, all these housing surrounded stocks tend to be looking fairly weak. Armstrong Worldwide, the flooring manufacturer, November 8th high at $71.32, 600,000 shares. Still hasn't made it back up here, but yesterday on the pop higher got to 366,000 shares. So that's kind of it. I'm trying to get back here to one of these things that's buried deep. And back. Come on, one more. There we go. Okay. We're up 10 points on the S&P cash. We'll go back here and look at the volume real quick. 4.1 billion shares. So again, like yesterday, it really slowed down late in the day. Same kind of thing. We had some fairly decent volume earlier in the morning, but the last two and a half hours been fairly light. And we came in a little less than 7 billion shares in all the markets yesterday. And I think we may be down another 250 million shares or more today if this pace keeps up, or should we say down? I think I did say lighter anyway. Okay, let me get this going on here. Had a quick question about oil. Down 66. Let's look at the OIH. You're just at this really maximum level of resistance, which is this gap down, goes back to the 6th of December with 18 million shares. You're doing 7.7 million shares. It's just this entire market is hitting some fairly significant resistance. We talked last week a little bit about China putting 4 new reactors online in 2020 after a little bit of a hiatus. You certainly have a little bit of a pop in CCJ, but what you don't have is any kind of true volume back to this November 7th high. Energy's fine, but it just looks like a lot of trading ranges in a lot of these stocks. Choice hotels, a lot of these stocks that are around REITs or interest rate sensitive, like these big places that own lots of real estate that could go up or down and heavily leveraged. Fairly light pop off that December 24th low, as most stocks found their low there. December 29th, you had 553,000 shares. So far today, 277,000 shares on a little doji out here. John Deere, always loved their ads as a kid. I grew up kind of at the very south end of a big city, but it was when I moved there, it was all cornfields. But I always remember they had an ad out there for John Deere. We stand behind all of our products except the manure spreader, which they sold lots of, I assume. John Deere has had about 5 days of, well, slightly improving action, but certainly 3 days of dojis out here. So this thing's probably maybe got 1 or more 2 days before this thing is going to wickedly move some way. eBay, as we take a look at that, is okay. Going back into this gap down, that gap goes to July 19th, where it gapped down on 51 million shares. Yesterday, we had 20 million shares. Today in eBay, we've got 9 million shares. So again, just all these areas of resistance. Not going to guarantee you that market's going to go down, All I can tell you, though, is it probably at least will go sideways for a while if it's going to go up, just with these light volume. EPAM systems, EPAM, going up against its August 30th high at 144.19. That had 522,000 shares. Yesterday came into that high with 267,000 shares. Got a little less than 200,000 shares right now. To 5. This one is kind of interesting. Most retail not doing all that hot this year. They did have some fairly big pops. This recent IPO, what, about a year ago? Maybe a little more farther back than that. November 8th, 125.75 with 1.3 million shares, up into that high yesterday with less than 600,000 shares. Today, you just have 358,000 shares with a doji. Energy off the low has been rather light.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We have a couple of questions about Google. Earnings weren't that bad. The Spectre, I always like that movie, Spectre, is that these folks will continue to get $5 billion fines infinitum. And I can't say that I can blame anybody in that, but it's kind of, they're starting to put reserves away that look like, yeah, they'll just continue doing what they're doing and take whatever the EU is going to give them. You know, basically around the levels that you were yesterday. No big whippy. It was down a little bit last night, but that's the same thing as Amazon, right? These things, they ramped them up into earnings, probably shouldn't have. Amazon a little weaker because they guided down. It's coming up a little bit today on light volume 3.3 on these. But Amazon's just weaker than Google, probably because it has so many more places to get in trouble than Google does. But to Google, not out of the woods. Eventually, $5 billion a number of times going to add up. I'm wondering when the market's going to say, okay, they have to do one of two things. Either abide by EU laws or just get ready to pay $5 billion a quarter. I suspect that complying with the EU is going to be a lot cheaper, which means that revenues will come down in the near future, at least for Google. For Amazon, you had a light volume bounce. You got into the high and pre-ran the market. You pulled back a little bit here. Everybody just, anytime that Mr. Bezos decides to start spending money, generally the market pulls back for his stock. Okay, what else we have? Natural gas. Long before everything started roiling higher in natural gas back in the fall, I had one opinion, and that opinion is not different than it was then. You had a very minor shortage that had everybody run, but you are going along a product that is thrown away. Imagine if you had whatever product, let's say it was olive oil, and it was just too expensive to get in the market, so you just threw it away. You were maybe doing something else on your farm, and these olive trees just continued to grow, whether you could do anything or not with them. And you know what? You just threw it away. It literally wasn't worth getting to market, or it was too hard to get to market. And that's the problem with natural gas. They flare as much as this stuff off as they actually produce. A lot of times it's just literally too expensive to move and or get to market, and or it would crush the price of what they're getting now. So they would just rather make some money on what they produce now rather than no money on all that they could produce. But they're just, it is problematic. I tell you what, when natural gas, when those guys quit flaring off huge amounts of it in Wyoming, which I talked about a year ago, that you need to dig into that and look at the flare. You have to burn it off. You have to ask for a permit. And everybody is still permitting all those mines up there in Wyoming. I don't think in other places you do. But as long as they continue to throw it away, it probably tells you something about the real price of natural gas. The next opportunity for natural gas to really take off, you might have a little bounce if we have some cold weather. But the real next opportunity to see natural gas move again is probably going to be around the 1st of August. I suspect that we have too many people on the wrong side of natural gas, and it may take 3, 4, 5 months to let this settle. But that's it. It's just a market that's got far too much supply and too little ability to get it to market, which gives you an idea that what could have been if the Germans would have made a deal with us to get our natural gas instead of trying to depend on the Russians. I always wonder how good an idea that was for the Germans. Seemed like a pretty bad one to have your enemies that want to invade you, and you are dependent for heat on their natural gas. But that's just me. I think weird that way sometimes. Anyway, I'm not a fan of natural gas until you start seeing a lot of people give up flaring it, and you see a little bit better way to get it to market, and also a lot of people willing to get it to market because it is fairly decent fuel. It's just hard to transport and costs more to liquefy. And right now, no one cares. And that's what it all amounts to, doesn't it? What else do we have? FSCT, Fort Scout Technologies, FSCT. November 8th, you had a spike. You're back into that today. Your spike was 1.2 million shares. Today, you got 150,000 shares. GOL, which is Golina Airlines, which I believe is the Italian Airlines, isn't it? I think that's what it is. Nice spikes higher back past the April 9th high that had 500,000 shares. You got a valid breakout in this one at 700,000 shares so far today. What else? We want to go to Rich in Oregon. How you doing?
Good, Dave. Thanks for taking my call.
Okay.
I was wondering, do you see any reason for life in Netflix after their earnings here, or are they just going to go sideways?
The biggest problem that Netflix has is how much money they're spending on content, and especially how much money they're spending on content in foreign countries where the return on investment isn't quite that good. So generally we're seeing in English titles less, and I'm thinking that there's some other issues out here too. But you know, they did okay on getting new customers, but it was only like 500,000 net new customers for the year. So they're pretty much done growing. If you don't have Netflix now, you're probably not getting Netflix. If you got Netflix and you canceled it, you're probably not going back. So everything is a little murkier since it's all about the growth in foreign countries. And all that foreign country growth comes at a very high price. Is that a net positive or net negative? I suspect that the market's probably going to wait, or most of the fundamentalists will wait until the next earnings call to see if there's a trend. But the trend wasn't good on earnings. It's pulled back. It's kind of back up here, but there's no volume. I would say this thing kind of looks to me like it is in a trading range. Maybe next quarter it can break out of that. You want to hang on?
Sure.
Okay, we'll be back in a second.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com. Educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Healthcare Realty, HR. Oh, did I get everything here? Yeah. We still have Rich on with Netflix. Sorry, Rich, I nodded off.
That's okay. I do it too.
Okay.
I was just wondering what kind of range do you see Netflix? Can it drift up to, 370 or 375?
It's probably going to go to 380. It's probably in a trading range of 386, back down to this big gap, which is 280.
Wow.
So
okay.
It's kind of like a sailboat out there. It's going to be pushed around without a rudder anyway. A sailboat without a rudder, probably going to be pushed around by the wind. If the market goes higher, I think maximum resistance on this is about 380, 386, and on the downside, if the market pulls back, you can see 280. But, probably 50% of any trade is the market itself, about 25% the sector, and about 25% the stock as a general rule. So you've got to be bigger. This has got to be, at this point, it doesn't have a lot of push higher or lower. So it's pretty much at the mercy of the market. Are you already long this?
Okay. Yeah, I was just wondering if it's caught in like you just said, it's caught in what the market's going to do. And if the market's going to go sideways, this thing
you're in the doldrums, or, you're just out there with a boat without a rudder getting blown around at the moment. So I don't see that there's anything other than the incredibly light volume that we're retracing the January 16th high with. But that would be the one that really kind of bothers me out here, is that you are getting into those highs. You got no juice today. A lot of the market is out here at very significant resistance levels. That doesn't seem to mean a lot right now. They've just pushed the market a little bit farther. But let's see what the volume is now for the rest of the market. I got to get this thing moved around here. Because that's the biggest thing. We had light volume yesterday. We came off a couple of billion shares off of the last part of last week. We got 4.4 billion shares now. And you really, this is certainly the point where you want to start seeing some volume come into the market as you get pushed higher, and it's just very light. So this would be a risk reward that doesn't favor much higher prices.
Okay, Dave. You answered my question. I appreciate it. Thanks a lot.
As somebody says in the horse latitudes, you can Google that. But certainly there are problems. Let's go back through the rest of these out here. IRM, which is Iron Mountain, hit this resistance. We talked about that for a while. We'll go back a little bit farther. This resistance is this gap down of December 12th of 2017. So a little over 13 months ago. And of course, you came down with 1.6 billion shares. We're back up into that gap, and you got into it with 2 million shares. So again, just a lot of these stocks, very light volume back up to the highs. Energy, not all that exciting off the October 26 low. If you want to make it look a little bit tighter out here, we'll just look at that. And then the December 26 low. Is it the end of the world? It's not. It's just you generally need to pull back on lighter volume and then get some energy and go run at it again. But the momentum right now in the market is just about dead for higher prices. You may see these 5 and 10 point moves. Sometimes it happens for a number of days until it just gives it all up at once. The IYF certainly has had very light energy off this December 26th low. You're back into the big down day of the 4th of December. That had 466,000 shares. Yesterday, you had 456. Today, just a little doji out here at 330. So you're back up against resistance on a big candle. The volume's not that much lighter in energy, but you certainly don't have this thing really going into it. As I said, a couple of stocks out there like Boeing actually giving you a sign of strength, but most of them are just kind of lazily going up to these highs and not doing much. Eli Lilly, another one at previous highs, this December 4th high at 119.84. As we see that, let me, I have to redo this. Okay. Do we have that? Yes, we do. Okay. 9 million shares at 919, or no, 119.84 on December 4th. Last couple of days, you've been hitting it with 4 million shares, 4.5 million shares. Today, you got 4.6 million shares. But again, into these spikes that went up in December, at this point, you have very light volume. LNG, which is Cheniere Energy, is finally broken over these previous highs of November 8th at 66.04 and December 3rd at 66.23. That had 4.6 million shares. The last few days, 2.5 million shares. Yesterday, 1.6 million shares. Today, 900,000 shares. The way I look at it is energy numbers come in tomorrow, and energy, IWM, some of the semiconductors look kind of the weakest, at least today. LVS, yep, unfortunately, the market does not act like everything it's telling us. It's telling us one thing and doing another, which is not nice. It's not nice to fool Mother Nature or fool the rest. Okay. Las Vegas Sands, another one up here on very light energy. The high on December 3rd was 59.21 on a gap higher. It filled that gap 2 days later. He had 10 million shares at 59.21. Last 3 days, 3.8 million shares, 1.7 million shares yesterday, and 1.5 million shares so far today. Energy was about 20% off on the way back higher. So that's not portending something great. Mondelez had a huge candle back up through the highs with a volume. This is a breakout with a sign of strength. The December 4th high had 9 million shares at 45.45, got to 46.31 on that breakout on the 31st. Next 3 days, this thing's just gone sideways. But light volume at $45 or so would be buying a high, buying on a breakout, but it is not. Like I said, there's a handful of these, but they're probably, I can show you 10 stocks that have gone to highs and pulled back into the trading range over a number of days on light volume, and a couple that have broken out on higher volume. Mercado Libre, testing the previous December 3rd high of 374.84. That had 800,000 shares. Last couple of days as we've gone into that, 500,000 shares. Yesterday, 360,000 shares. Today, 332,000 shares. So we got into that high today went above it by a dime and pulled back into the trading range. So keep an eye on that. We'll be back in a minute.
The universe provides us with opportunities all the time, and I was no different. In 2006, I invested $2,500 in a 2-day Master Trader course taught by Tom O'Brien, then ranked as the #1 market timer for gold. The fact is, if you want to be the best, you must learn from the best. Hi, I'm Steve Rhodes, author of Mastering Probability and the Market Timer of the Year for 2018. To celebrate this accomplishment, TFNN.com is offering you a free 2-week subscription to my award-winning newsletter service, and there's no charge to you until day 15 unless you cancel sooner. That's right, we're waiving the normal upfront deposit, and this offer is available to anyone and everyone, even if you've tried Mastering Probability before. Sign up now, and I'll teach you the tool that identified the bottom in the Dow on January 26th, the morning that led to the largest daily point gain in history. This offer will expire on February 10th, so go to the homepage of TFNN.com now and click on Mastering Probability.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And my engineer says that the lady that played Mother Nature on all those Fleshman, I can't believe it's butter, was Marlene Dietrich's sister. I haven't checked that out. I'm just telling you what he says. But, you never know. You hear a lot of things. I always love the big rumor that the Mr. Rogers was a sniper in Vietnam, which wasn't true. There was a bunch of those things that we learned back there in the day before the internet that you couldn't check, that just never were true. Now you can check. Doesn't mean it's going to be right, but you can check. Anyway, we were talking about Mercado Libre. Pretty nice volume as we get back up there. We just have a note in the den that Chainsaw Al Dunlap died. Do you remember him? He was he went to go in and tear apart companies and make some value out of them, but left a smoking pile of ash behind him. A Chainsaw on Al Dunlap for those people in the market. Anyway, we were looking at that. Do we have anything else wanted to look at. Oh, someone asked me about this. I've got about 30 seconds. Is there anything going on in the lithium trade? And today, ITHM is being pushed by somebody big on the street. I can't remember who it is now. LTHM, it certainly is. And that is an alternative to ALB. But you know what? Is that right? LTHM? This isn't right. Got the wrong symbol. Anyway, I may have typed it in wrong, and I'm out of time. So I'll leave you on this. But ALB, being downgraded, pushing another lithium company. I'll try to get that for tomorrow. In the meantime, sell when you can, not when you have to. We will see you here tomorrow.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. No matter